In this video, I'm going to show you guys the best 3-step strategy that I have used to pass many funded challenges on FTMO in order to acquire trading capital. Okay, so this is the Toto Capital unrefined trading strategy, and I'm going to break it down step by step. There's 3 steps in total, and it really is an objective strategy and a very, very profitable one as such. Okay, so number 1 is our higher time frame break of structure. And this is very simple. Okay, so you can clearly see here, let's zoom in, guys. Let's jump in. Clearly, we've broke structure to the downside. Okay, the reason we've broke structure to the downside is because, so we have a low in the market. So we have a low, followed by a lower high, followed by a strong break to the downside, indicating that sellers are clearly in control of this market. Because if you look here, there's consecutive strong selling candles, bearish candles, indicating strong bearish momentum to the downside. So this is not just the everyday person. This is clear institutional involvement, right? This is deliberate and this is on purpose. So clearly institutions have pushed price strongly to the downside here. We can mark this on as a BOS, a break of structure. We've broke structure to the downside, indicating strong bearish momentum. Okay, let's just get the rules here for you guys. We've broke structure to the downside on our higher time frame. So number 1, that's ticked off, right? In this example, this is AUD USD on the 15-minute time frame. So structure, it doesn't matter what time frame you're using, price always reacts the same. Okay? Once we've identified a strong break of structure, we can mark on our guarded high. This is our invalidation level. So we can mark this on as a GH. And if and only if price comes back to this area, back to this level, then we can be looking for a short trade. Okay, so this is our invalidation level. If price comes back up here and closes above the guarded high, this indicates that the sellers are no longer in control. Okay, and then our bias may be shifting. Okay, but for now, this is our guarded high, and then we can mark on number 2, which is our identify our POI, our point of interest. And simply, this is the area where institutions may be looking to short this market. Okay, it's not guaranteed, but if we use the signs that we're looking at number 3, therefore we start to build a very strong sell bias case. Okay, we mark on our POI is the last up candle before the sell-off. So the last up candle from the open up until the high. Okay, this is our POI, our point of interest, and it's also known as our extreme supply. So if and only if price comes back into our extreme supply, we can look for a trade from this area if our entry schematic lines up, which is number 3. Okay, and the reason why that we're looking to trade from here is because if you imagine retail traders, right? Most retail traders look at this and they understand, all right, we've broke to the downside. We've got a break of structure. Okay, guys, let's enter on the retest, right? That's what they say. Let's enter on the retest. As soon as price comes back here, we'll enter. We'll have a stop somewhere in this zone, and we'll play price on a little bit, and you instantly stopped out. Or they'll have a stop above here, and it's way too wide, it's way too loose, and your risk to reward is absolutely awful. So retail traders get absolutely wrecked in this market because they don't understand these concepts. Okay, so they're going to be trying to short on the break, short on the retest. It's just an absolute mess, to be honest. Okay, so the reason why we have this extreme supply is because this gives us a clear area of where we can look to execute a safe trade, and also we're near our invalidation level, because basically if you're a retail trader, I know technically I'm a retail trader, but in terms of the concepts that you're using, if you're looking to short here or anywhere on the break, basically you need to understand that price can come back into our extreme supply at any point. So you're shorting here with an extreme risk, knowing that price can come back in here and it can come very close to our guarded high, our invalidation level, before ultimately reversing. So that's why it's very important to use these concepts, okay? Because it gives you the best chance of success, the best probability of success, okay? So price comes back into our guarded high, into our POI, our point of interest, okay? And institutions, they need to decide, basically, in order for institutions to move price like this strongly to the downside, they had to buy strongly into the highs here. And then, so they open buy positions and then they open sell positions strongly. Basically, the buy positions create liquidity in order for them to be able to dump the markets. Okay? And it also entices retail traders to go long on this market as some extra liquidity. Okay, so retail try to go long, etc. Basically, when price comes back into this area, institutions have a decision. They're going to decide whether they want to close these long positions here at around break even. As you can imagine, if they bought around here, when price comes back in, it's going to be around break even. So do they close these long positions around break even and enter more sell positions, or do they close the long positions at break even and enter and do nothing, right? So it's a huge decision, right? When it comes back in here, are they going to exit these long positions and enter more short positions? If they do, that'll result in another bounce to the downside, targeting this equal low, and then all of the liquidity to the downside. Okay, and we don't know exactly what the institutions are going to do, but we have number 3, which is our higher time frame confirmation, and this is a signal to us of what the institutions are doing, right? Because if you imagine this candle here, let's isolate this for you guys, this rejection candle, imagine this from this perspective. So price tried to push up strongly, the buyers tried to step in, and then instantly got rejected to the downside, and then price closed back down here. That's an indication that the buyers are not in control of this market and the sellers have stepped back in. Okay, because if you imagine this, so this move coming back in, the buyers are in control, and when do they then lose control? It's here. They try to push up, they get rejected instantly. This is an indication of number 3, our higher time frame confirmation, also known as, I guess, a doji or a strong rejection. Okay, this indicates sellers are back in control, and therefore we should melt or at least move to the downside. We can enter a short position on the close of this candle. Stop loss goes just above the wick. Notice how this is also above our guarded high. So therefore we've got a very strong, a very safe stop in above our invalidation level. Targets, first TP, first target is going to be down to the equal lows here. We can mark this on as our liquidity, and we're also going to be targeting, so equal low, and then further all of this liquidity below the lows of all of the buyers that have tried to get in this market way too early. Okay, so we're triggered in this trade. We're entered on the close of this market here, right here. Stop loss above, and let's allow this trade to play out. You can see price instantly melts to the downside, and price moves a strong 1 to 5 risk to reward. So if you risked 2% on this trade, you had a possibility of making 10%. So on this one trade alone, you could have passed a FTMO challenge and got funded. Okay, so when you think about that, it really boils down, you don't need many trades. You do not need many trades across the month. Okay, what you need is quantifiable and, profitable trades, the ones that follow the rules to the T. Okay, when everything lines up, when 1, 2, and 3 line up, you take the trade. There's no hesitation. Okay, 2% risk, you could have made 10% on this trade, you could have passed an FTMO challenge. Okay, that's the scale of this strategy. Okay, so I want to keep this very short for you guys. If you did like this video, drop me a comment, let me know your thoughts below. Any likes are appreciated, and please subscribe. All right, I'll see you guys in the next video. Please take care, guys, and happy trading. Take care.